I'm Owen Bigland. This is the Inside Edge video blog. Okay, as promised, I'm going to give you guys another update on the current situation with Strata's insurance premiums going through the roof. And I've done a couple of blogs, and I told you guys that let's just, when it first started hitting the news last year, people were, of course, calling for this is the demise of the Vancouver real estate market. It's going to crash the market. People are going to have to be forced to sell because their insurance has gone up. And I told people back then, I said, just stay calm, stay cool. Yes, this is a concern. I've been talking about it for over 2 years. I've been telling people about how the personal rates have been going up and how the stratas are shifting liability from the strata over to the owner's insurance, which is a good thing, which I'm going to tell you in a minute. But these insurance declarations or policies on these stratas renew throughout the year, and this started last fall. And as I said to people back then, let's wait and see. I'll give you guys some stories from the front lines as these policies start to renew throughout the year. And so I can give you another update now. Here we are in spring 2020. I've had a bunch of sales this spring. So I am privy to all the insurance declarations on these stratas. Downtown Vancouver, Richmond, some of the stuff out in the suburbs. So I'll give you some kind of the good, the really good, and the ugly on where I'm seeing these policies renewing. And yeah, there are some outliers out there that have had some incredible insurance increases, 300, 400%. I'll show you one here. But again, they are always, so far, and all the ones I've seen are a result of some heavy claims. Insurance premiums have gone up across the board about 75, maybe 50% to 100%, even if you haven't had any claims, as I'm going to show you here. But the ones that have gone up 300% or 350 or 400%, yeah, they're outliers, and they've had a lot of claims. They've had a catastrophic flood or a fire or something else, as I'm going to show you here in most cases. So I'm going to give you some stuff from the front lines here, and I'm going to put some actual dollar amounts on this as to what this related to as far as either strata fee increase or a levy to cover the increased insurance. So let's kick it off with a nice little 1-in-den, 800 square foot Yaletown concrete condo, 30 years old. Insurance just renewed in March of 2020 until March of 2021. The premium on this policy went up $92,000 annually. It was a 80% increase from 2019. This equated to another $80,000 on this building. It's about a 190 unit, again, 30-year-old concrete tower in Yaletown. So it equated to another $80,000 insurance for the entire strata. So if you take the unit entitlement, this was a 800 square foot 1-in-den. That worked out on this unit a increase of $465 annually to this owner on the 800 square foot unit. So that was an 80% increase here in Yaletown, which is pretty substantial. But $465 annually, and that's what I want to point out. These are mostly what I'm seeing here. 50 to 100% increases, which is a lot. And they equate to anywhere from $350 to $500. It depends on the size of the unit based on your unit entitlement. A smaller 1-bedroom in here would pay maybe $300 a year. This one, being the size of a typical 2-bedroom, is $465. Now, how this will be dispersed, there's a number of options here for the stratas. We need another $465 to cover the increased insurance for next year. They're also, of course, going to need increases for things like janitorial and maintenance and everything else. That always goes up, about 5%, 5 to 8% is what I generally see across the board, excluding insurance. So this $465 can be made up in a number of ways. The strata could say, hey, we're just going to increase the strata fee by $18 a month to cover the insurance, plus another $2 or $3 more a month to cover the maintenance and the janitorial work and everything else. They also could do a levy. Just levy these people $465 to keep the strata fees pretty much where they are, minus the increased cost to operate the strata. Again, the janitorial and all the other stuff. Or they could even, in a lot of cases, this particular strata has about $1.1 million in the contingency fund, healthy contingency fund. They could easily take that 80K that the insurance went up and just take 80K out of the CRF and everything stays the same. Or it could be a combination of the three. So hardly breaking the bank, folks. And this is so far what I'm seeing pretty much for most of the concrete towers downtown, in downtown Vancouver, unless they've had some crazy claims and a whole bunch of water claims. And I know some of those are out there. I'm going to get to one here in a minute. Another one here that I just sold a couple of weeks ago. This is a 6-year-old concrete building in the West End. They had, back to Yaletown. Their deductible went from $25,000 water deductible to $50,000, which is pretty typical. And $50,000 is still quite low. Just let me talk about that quickly for a minute. That's what you're also seeing. The premiums are going up 70, 80, 90, 100%. And they're also bumping the deductibles on the individual owners. Now, this is a good thing. $50K is still pretty low from 25 to 50. I'm seeing a lot of them downtown now at 100, and I'm going to tell you one here in a minute at $150,000 deductible. But you have to understand how this is going. You see, the stratas are trying to take less onus off the stratas policy and putting it onto the owners, which I think is a good thing. I did that blog last month on how most floods, which is the big thing, water claims, are completely avoidable. It's just negligence on the part of the owner or the tenant. They're not changing debraded lines on the washing machine. They're not turning off the master water when they go away on vacation. A lot of these things are preventable. So they're taking the onus off the strata and putting more and more of it onto the owner in the form of higher deductibles, which is good. That's the way it should be. Because can you imagine you're an owner in here and due to some numbskull, and I'm going to tell you in a minute here, who puts a hanger on the sprinkler system and does $1 million worth of damage, triggers the strata's insurance policy and raises everyone's insurance 300%. From what I understand, and maybe someone can correct me on this, the vast majority of water claims are under $50,000. As a matter of fact, I hear that most of them are under $20,000, meaning that it's a flood, the toilet overflows, a sink overflows, maybe the dishwasher hose breaks and leaks for 20 minutes. It's mostly contained to that unit or maybe another unit. It's seldom, it's fairly rare you get these catastrophic floods. So in most cases, if you've got a $25,000 or a $50,000 deductible and your dishwasher overflows, usually it does not trigger the strata's policy. And that's good. These deductibles are starting to go up and they're taking the onus more onto the owner. And I can tell you that when your deductible goes up from 25 to 50, you're not looking at a huge premium increase on your personal coverage. My policies range from $350 for some of my rental units I'm up to now about $800, $900 a year on my personal insurance. And my deductibles keep going up, but it's not going to break the bank, folks. Generally, it's not when your deductibles go from 25 to 50 or 50 to 100. But the purpose here is to take the onus off the stratas policy so that maybe owners or their tenants care a little bit more and put it on them, because most of these floods won't trigger the stratas. It'll be under $50,000 and the owner's policy will cover it. Give you another quick one here, another one in the West End, 6-year-old building this time, not 30, 6-year-old. Their policy went up from $45,000 annually to $90,000. So about 100% increase. There's 121 owners in this building. So very small increase here. Might add $7 or $8 to their strata fees. They could easily levy that insurance increase and just pay for it out of the levy everyone $100 or $200 or whatever it's going to be, or just take it out of the CRF and cover it. There's a number of options there. Their water deductible on this one went from $10,000, which is pretty low, really low, to $35,000. So again, their premiums are going up for the strata, and to help keep it so it doesn't go up too crazy, they're putting more of the onus back onto the owner by increasing their deductible, which again is a good thing. It starts to have owners, I think, and instructing their tenants to start doing those things to mitigate water damage, which is good. Okay, let's go on to the ugly here. So here is the other end of the spectrum. This is a 2-bedroom, 2-bath out in Brentwood that we put an offer in on. And this is going to be a warning call here. Want people to be aware of this too. Give you a situation here. Got all the Strata docs on it. 2-bed, 2-bath, about 900 square feet. Very good building, concrete high-rise, 9 years old, good developer. Back in early 2019, there was a catastrophic flood. Bad flood. Over $1 million worth of damage. Some nitwit put hung a hanger onto the sprinkler system, which is on the wall. And I think somebody can verify this. I think when those things trigger and the sprinklers go off, I think it's something like 50 or 60 gallons a minute that is coming out of those sprinkler heads. It triggered all the sprinkler heads in the entire unit. So it took a while to get that turned off. It did damage to, I believe, about 15 units. The unit was on a 20 or 25th floor, and of course flooded down and caused water to come down through the walls and damage another 20 units. I think in excess of $1 million. They didn't actually put a number on it, but it was extensive water damage. That was in early 2019. The minutes were very vague on this. Talked about the water, the sprinkler head, somebody put a hanger on it, lots of damage, no dollar amounts. The policy on this Strata expired in early December. And in the January minutes, it was almost just, by the way, it was one blurb. Our insurance has been renewed and the premium increase was 345%. And our water deductible has gone from $50,000 to $150,000. Stay tuned for more details on this in the coming months. In February and March, there was really nothing about it. So I had to make some calls to the property manager, had to talk to the listing realtor about this. The premium, as it turns out, was increased, as I say, it doubled 345%, but I wanted to know what that dollar amount was. What was the dollar amount on a 345% increase? It turns out it was just over $500,000 for the Strata, $500,000. And the deductible went from $50,000 to $150,000, which I think is the highest you can get. So I had my guy, remember we had an offer on this, an accepted offer, but we hadn't removed subjects yet. We're doing our due diligence on it still. I had him go get an insurance quote for $150,000 deductible based off the current premium, or off the current declaration. The premium was going to be $2,300 a year on this 2-bedroom, 2-bath, so very expensive, but you'd expect it. Apparently, they have to get a sub-insurer for a lot of this with $150,000 deductible. They cover $100,000 and they get a sub-insurer to cover the remaining $50,000. $500,000, but here's where it gets crazy, folks, and why you really have to do your due diligence now. This insurance stuff now is every bit as important as getting a home inspection if you can, reading all the minutes, reading the depreciation report. It's right up there now in getting that insurance declaration. And a few things. You want to see what the total policy is on the Strata. You want to see when that expires. So they all renew for 1 year at a time. So you want to see when the expiration date is on this current policy. But here's the crazy thing. You need to find out if the current insurance increase, especially if they've seen one, it doesn't matter too much if it's gone up 50 or 100%, and we're talking 50 or 100K. You know you're going to get a bit of an increase when the budget comes out. But on $500,000, you definitely want to see has that $500,000 increase been reflected in the current financials and or in the current Strata fees? Have they levied or what have they done? In this case, if you can believe it, they renewed it in early December. Here we are in mid-March. And no, they have not reconciled that $500,000 anywhere. They never called an SGM, which is what they should have done. They should have immediately called an SGM and addressed that $500,000 and decided how they were going to pay for that. Instead, according to the property manager, we're going to wait until the AGM, which isn't until late May. So here they have a $500,000 increase that has not been recognized anywhere in the financials or the maintenance fees or talked about any levies or anything. Now, as it turns out, this is about the worst case scenario, but just to give you an idea of what that is, and it's tough. It's a big amount, but it's still not, I don't think, a reason to sell a unit because the insurance has gone up and panic. It turns out the increase for this particular unit based on unit entitlement is $1,750. Now that's a lot of money. $1,750 has to be paid by this owner to make up that $500,000 increase. Now this strata had about a $500,000 CRF, pretty low maintenance fees in this building, really low actually. So again, they could do this three ways. They could take some money out of the CRF to help mitigate it. They would be unwise to just tack this on to the strata fees, because if they did that, $1,800 would bump the strata fees on this unit by about $145 a month. That would take the strata fees up here close to $400. That would not be advisable. And if you're on strata council or in a strata that's got a pretty good increase, I would advise you not to pile that all onto the strata fees. Do a combination of things. Do a levy of $500 or $1,000 or whatever. Maybe take a little out of the CRF and add a little bit to the maintenance fees. Do a combination or something, but do not just offload this to the strata fee. That would be a huge mistake, because now you've got a $400 maintenance fee and it's an immediate red flag to people. But they've got a bunch of options here they could do. That's a big increase, $1,750. But you know, they could levy the owners $1,000, take a little out of the CRF, and then bump the maintenance fee by $10 a month. So there is a combination. But the crazy thing I want to point out here, again, to the unknowing buyer who doesn't do their due diligence on this, you know, this has not been rectified yet, and there's no talk about it at all in the minutes. Nothing other than a little blurb in January saying our insurance went up 345%, and by the way, your deductible has gone from $50 to $150. Talk to your insurer. But no dollar amounts or anything mentioned in the strata minutes. So be careful out there. Probably now one of the most important things is when you're writing an offer, or if you're writing an offer subject free, you got to get all the insurance deck. Now is probably one of the most important things. What is the premium? When does the declaration expire? If it's coming up soon, you got to call the property manager and get a feeling for you know, what is this going to renew at? And I can tell you the other thing too is, because of all that's going on and some big insurers are left, apparently on a lot of these policies, they're not renewing them now until about a week before they're due. It used to be they might renew them a month or so. Now they're all coming right down to the wire, and they'll tell you, yeah, we have secured insurance, but we can't tell you what the price is until after it is renewed. But usually they can give you a ballpark number. I've got a listing rate or a sale right now in Yaletown that talked to the property manager. The insurance renews early next month. He tells me that the insurance has been secured. They haven't locked it all in yet, but expect about a 75 to 100% increase. But so then you look at what they're paying annually and what that equates to a dollar amount. It might be 80, 90, 100K. If you got 200 owners in the strata, hey, it's bearable. But pay attention to these things, and it's dangerous here when they're renewing insurance and then not doing anything about it until 6 or 7 months later, 6 months later until they call an AGM, and then they rectify this insurance. And then it'll be reflective in a special levy. So do your due diligence on it. I'm Owen Bigland, as always. Thanks for, one last thing I'll close out on. Interest rates right now, just wanted to tell you about that. As I speak, interest rates are now at historic lows. I checked with a couple of my mortgage guys. You can get a variable rate mortgage right now at 1.9%. You can lock in a 5-year fixed for about 2.45. This is unheard of. I can tell you that I'm in the process later this summer. I'm going to reorganize a couple of my investment mortgages. I've got one right now I'm paying 3.15 on, and I've still got almost 2 years left on it. I've got another one that I'm over 3% on that I've got a year or more on. So I'm going to be refinancing some of these mortgages. I might have to pay a little bit of a penalty. It'll be a blended rate, but it'll still bring down my interest charges. I'm actually going a little one step further. I'm in the process, I'm talking to my guy at Royal Bank. I've got some properties that I have clear title on, investment units that I've owned for over 30 years. I'm actually at the point now with this kind of rate that I might take out a refinance, take out 100 or 150K at 2.5% and put that money to use in the stock market where I can get a 6% yield all day and take advantage of the dividend tax credit. That is not for everyone. I'm not advising everybody do that unless you know what you're doing. But in this situation, I'll get the tax deduction, and if you can borrow at 2.5 and get a pretty much guaranteed 6-7% over the next 10 years on an investment return, it's almost too good to pass up. But use it sparingly and do not over leverage. Pretty tough for the banks to let you do that anyways in Canada. It's almost impossible. They only lend you money or give you money if you don't really need it. Remember that. I'm Owen Bigland. As always, I'll see you next week.